pulled my eyeball.
We're waiting on 10 o'clock.
Yes.
Can I there's not just like,
Okay, she's rejected us.
alright.
Sit down and wait.
I should have brought my own mug. We should get like bus shaped mugs.
All right.
That doesn't sound like
10 o'clock. Let's call the meeting to order. Just like to welcome everybody to the Board of Directors meeting for June 25th, 2019, including our guests, members of the public, and our board members. And I'd like to start by saying a big thank you to Howard for steering the ship for the last 4 years through some controversy and craziness and getting us where we are today. And hopefully we can continue doing the job that you started for us. All right, with that, Beverly, you want to do roll call?
Yes, sir. Thank you. Good morning, everyone.
Good morning, everyone.
Chairman O'Halloran.
Here.
Mr. French.
Here.
Mr. Jones.
I'm here.
Mr. LePackett. Mr. Cody. Mr. Durant.
Here.
Miss Odell. Mr. Ellis.
Here.
And Mr. Astor.
Hello.
Thank you.
Now we have approval of the minutes. We're going to need a motion on that.
So moved.
Bill, Durant.
Second.
Second, Clinton. All those in favor, raise your hand. Carries. Next we have our presentation from Sterling Seacrest. Welcome again.
Thank you. Good morning, everyone.
Good morning.
All right.
Hey, how you doing?
Doing great, thank you. All right. Well, thanks for having us.
Can you wait 1 second?
Of
We have
course.
2 board members coming
Absolutely.
in.
Morning,
I
DJ.
got them seated so we don't disrupt you in another 5 minutes.
So then,
Good morning.
How are you, Peter? Good morning, Dietrich.
Hey, how you doing?
Parking as
Howdy.
usual out there?
Yeah.
I'm gonna have to get a shuttle bus from over at the other center and come in.
All right, are we ready?
I think we're set for now.
Okay, great. So I'm Cindy Robinette, and I'm a partner and client advisor at Sterling Seacrest Partners, and I have my colleague Jenny Osaka here with us today as well. Together we work as advisors and consultants to Chatham Area Transit and the placement of the property and casualty insurance program. So what we're going to walk through this morning is the renewal. It's a July 1 renewal of the major programs. There are a couple others that occur after July 1, but this is the bulk of the program. So we're going to walk through the renewal offerings and the recommendations. And I thought we'd start first just giving you an update of the overall state of the market in property casualty, because it is changing. Over the past 10-15 years, it's been in a state of declining rates. Well, that prolonged period of declining rates has transcended, and now we're in a state of correction, because during the period where we had favorable premiums in the market, the claims experience overall property casualty has been less favorable and going up, and not only in the property arena, which you're very familiar with all the natural catastrophes over the last several years, but also on the liability side, large verdicts, severity, and issues. So overall, the market is not as favorable as what we've reported in the past. Now, that being said, I would like to comment that Chatham Area Transit is considered as a best-in-class by the insurance carriers, and that is just a testament to what your folks are doing in terms of managing risk, preventing risk, claims management, as well as, when things do occur, managing those cases very aggressively. So what we're seeing for a lot of other clients as far as rate increases, we have not seen in your renewal, and so you should be very pleased with that. Some of the worst areas of rate increases are in the auto liability sector. The auto market combined ratios, which is a measure of insurance company profitability, has been over 113% for the last 2 years. What that means is insurance carriers are paying out $1.13 for every dollar they're taking in. So they're not going to do that for very long, because they are in the business to make a profit. So, that's the biggest area of your expense. Again, fortunately, your rates are just slightly up for the renewal, whereas most clients were seeing rate increases in the 15 to 50% arena. So good news there. Workers' comp is one bright spot, surprisingly. It's about the only bright spot in the market where we're seeing some slight rate decreases. And we have an interesting proposal that we've brought to Chatham Area Transit, because you've been on a large deductible basis in the future when we have an option to for a guaranteed cost certain option for you that we'll walk through. So let's go into the programs. This may be a little bit difficult to see. The information should be in your book. I just want to highlight each of the policies that are renewing, not necessarily focusing on the premium in this slide, because we have comparison on the next one. And if you have any questions as we go through, just feel free to stop and ask. The property insurance is with Access Insurance Company, has a $22.2 million each occurrence limit and a $5 million sublimit for flood and earthquake. We have been able to maintain the 1% deductible for named storm, and then a $5,000 all other perils deductible, slightly higher deductible for flood. General liability and auto liability are both underwritten by RLI. They've been on the program for a number of years. You know, we've shopped each of these programs and have brought you the best of the offerings, and RLI once again came in with the best program. $1 million each occurrence or each accident limit on the auto with a $25,000 deductible, both on the general liability and the commercial auto. One option we'll be talking about when we get to the breakdown of the premium is historically, CAT has not purchased collision coverage on the bus fleet and the vans because you have make your own repairs. But over the last year or so, we've added about 20 buses or more with values over $400,000. So we've received a quotation for collision coverage. If you total one of those buses or two of those buses, you're looking at a pretty high cost to replace. So we have a premium built in to add that coverage. Workers' compensation is with Amerisure. You may recall that it's, yes?
I'm sorry, what is ACV?
Actual cash value. Sorry, we use a lot of acronyms. That means it's going to be depreciation. And
So does CAT, and Terry still hasn't given me the handbook.
sorry about that.
Right.
Good question. And there may be others, so please, like EPL, when we get that's employment practices liability. So we put it smaller because we couldn't fit all the text in there, but I'll try to go through those. Workers' comp, again, historically, or at least for the last 5 years, the program's been with Amerisure on a large deductible basis, meaning for every accident, CAT has retained the first $300,000 of the claim before the insurance kicks in, and it provides statutory benefits. Fortunately, the claim experience has been well above average. You've performed exceptionally well. So the program has brought you the lowest cost out there. However, there is a lot of volatility in that, and you can have significant claims within that first 300. So we have an option, which we'll talk about at the end, for no deductible. So you cost certain. It's a little bit higher in cost, obviously, because you're not coming out of pocket for your claims, but an attractive option for your consideration. And then the public officials, legal liability, management liability, employment-related practices for discrimination, wrongful termination, harassment. We are seeing a rise in claims in that arena. Your renewal with Chubb, not against Chatham Area Transit, just overall, is your renewal with Chubb remained flat with a $2 million limit. And then last year, the board had made the recommendation that CAT purchase privacy security liability for privacy breach, cyber extortion, cyber crime, those types of risk. So that program is renewing flat. There's no change. There's a $5 million limit for that, which would include, if there were a breach, notification costs, monitoring, as well as any liability, fines, penalties, etc. Crime was also added, and that is for employee theft as well as computer fraud, forgery, theft of money and securities. And that program is with Travelers and also is a flat renewal. Here's the premium comparison. This gives you a sense of what's expiring and what we're looking at for renewal. On the property side, The values came down slightly, so even the premium's down, but there was a slight rate bump. But all in all, the cost is down because the values came down slightly. General liability, pretty much flat, slight increase just because some of the exposures increased in the revenue and the employee count. In fact, we had 11% increase in payroll. On the auto, we had a slight increase on the auto liability rate, which will be in the next slide, but a decrease in the physical damage rate. So the increase you see here, which is the most drastic, is largely because we increased the units meaning the number of buses, the number of vans, from 121 to 136. So all in all, if you take the unit count, you're pretty close to a flat combined rate between the liability and the physical damage. The optional auto collision, that would be an additional cost, and that's something that management has recommended for approval. $54,000. It covers about $10 million in values, and that would provide collision coverage for vehicles that are 2018 or newer. And again, that's about $10 million in values, and we have about 20 buses over 400,000. So if they were in an accident or totaled, you'd have collision coverage if you purchase that option. And then the rest of the coverage, public officials and employment practices liability, renewed flat. The workers' compensation, even though the payroll was up 11%, there was a rate decrease. This is just the deductible premium. So claims in the first 300,000 are on top of that. Yes, I'm sorry.
So the business automobile and the optional auto collision,
Yes.
how are those different? What are they protecting?
Certainly. The business auto is what you purchased in the past, and that includes the third-party liability if you're in an accident. It also includes some specified perils coverage for physical damage for the autos, and that's if you've got all the buses housed in one area and there's a fire, there's windstorm, tornado, that sort of stuff.
Mhm.
It also includes collision coverage on private passenger autos. All that's what you guys have purchased in the past.
Okay.
What you haven't purchased is the collision coverage on the buses and the vans. If they're involved in an accident and there's damage to a cat bus or van, there's no insurance coverage currently for that. It was always repaired, in your shop. The risk is you've got to, if you total one, that's
Yeah.
$400,000 that you're out. So the thought was for that pricing, does it make sense to buy up the coverage for the collision? And again, it would be for the 2018 vehicles and newer.
Clinton doesn't buy car insurance.
Right, it saves a lot of money.
Yes, it is expensive, that's for sure. Okay, and then, so again, just back to the workers' comp, that's the amount that goes to the insurance company for handling the claims as well as paying losses over $300,000. What you don't see in that cost is your claims cost, and we'll get to that because we have another option. Just some highlights so you see a little bit of the work that goes into the property. We did go to a number of different markets. Coastal exposure is a challenge, and also we cover the property program covers the docks. A number of insurers don't want to write the docks. So what we got back was the best of what we could find in the marketplace with Axis. And they did have a rate increase, like I said, but some of the values went down. So all in all, the premium is down from last year. And we're able to maintain the same structure and the 1% deductible. A lot of customers in this region will have a 3% or even higher wind deductible, which means if there's a hurricane, 1% of the damage is your deductible, which can be a big number when you're talking about 22 million. Right. Commercial auto, this is just the background of the rates. You'll see that the units to the left, the 2018 rates are in the next column, and we applied the 2018 rates times your current units so you can see a little bit more of an apples to apples difference. So you see we're up slightly on the liability side. When we get to the physical damage, we are down. So if you were to renew the program without buying the collision coverage, we would be expiring about $974 on a same unit basis. to the renewal at 971. But buying the additional collision takes it up just over $1 million. So a really great result given the auto market. And again, that's just a testament to the training that goes on, the screening that goes on, the technology on the buses, the claims management. You guys are doing a great job. So, thanks. Workers' compensation. Again, Amerisure is the program that has been in place for at least 5 years. Payroll went up 11%. They gave us a rate decrease. So all in all, a very good renewal, but concerning because of the volatility in the first 300. And you just never know what's going to happen with the claims. So we have an option from another carrier, Eastern Alliance, an A-rated insurance company, for a guaranteed cost program at $383,000. So instead of paying the $228 plus claims costs, the all-in premium will be $383. Yes.
Can we talk about this
Absolutely.
for a second? Terry might have to answer some of this. On the surface, it looks like that's a no-brainer. I mean, an extra $100,000 that could, with one claim that hit the $300,000, we've saved $200,000. But what are our normal claims?
Would you go to the next slide? Great question. Okay, so this is a summary of your losses since 2014. And you see in the left-hand column the paid losses. This is total incurred, means what they expect to pay out, because you've got what's been paid and then some reserves on cases that are still open. So in that first year, your total losses within the deductible that CAT had to pay on top of that $200,000 premium was $582,000. In the next 4 years, you see what great improvement has been. So just over $100,000 has been paid out in losses over that $228,000 in premium. So if you look at your 5-year average claim cost, it's been about $207,000. Your 4-year average, if you take out the high year, it's been $114,000. So the deductible has been performing well. So if you had chosen the fully insured program over the last 4 years, you may have lost because the deductible program has panned out better. If you take the average loss estimate, your total cost is $342,000 versus the $383,000. However, we all know those claims change on a go.
Okay, I guess that's kind of where I am on this so far. Is going with option 2 is at worst a wash, unless we can tamp it
It's
down
very
even
close.
more. But based on the last 4 years' performance, it's essentially a wash. And it could be a real benefit.
Could be a real benefit, yeah. So there's a lot of safety in that.
Okay, thank you.
And the insurance carrier, Eastern Alliance, has programs that are very similar to Amerisure in that very robust risk control, return to work or return to wellness plans they'll work with Chatham Area Transit on, as well as very aggressive claims management, case management. So we're really comfortable with the services they'll be able to provide in that as well.
And if we switch carriers, there'd be no.
Yeah, they're both very, very good in that respect.
There'd be no hiccup in the transition.
Should be no hiccup in the transition. And the other thing on the Amerisure program, you've got to collateralize the deductible. So there's a $200,000 letter of credit that has been given on the deductible program. That letter of credit requirement is going up to $375 for this year. If you don't go with Amerisure, you don't have to fund that increase in the letter of credit, because there's no collateral in this one, because it's all cash premium, and that's your cost. And the only way that cost would vary is if your payroll goes up, it's rate times payroll. But that happens in any audited program.
So with this carrier, there's no change in the year-end audit when they come in to do the actual payroll?
That's right.
That 11% is a little off because that's a projection based on us being fully staffed for the whole year.
Yeah.
So at the end of the year, a workers' comp audit always not always, but most of the time, will be a credit.
That's
because
right.
of that. We use an estimate and a projection, and the assumption is we're fully staffed all year.
Yeah.
And we all know that doesn't happen in the real world.
Yeah.
So usually, that 11% number is kind of high. but
Right.
That's why. We're
Yeah,
using
well, that's a
an
very good
estimate.
point. That will come back to your actual costs. You do get that money credited back if it's not 11%. If it comes back at 6%, you get it back dollar for dollar. If it comes back at 20%, then you're going to have to pay more. So,
It's like an income tax refund.
Exactly.
And we can take a vacation with it.
there you go. All right. So, and that's really it. So I guess, as far as we're concerned, we think you had a very good renewal. We'd love to take credit for that, but it really is all the team at Chatham Area Transit having just a really, really good program that insurance companies are interested in providing options and not giving you the standard market increases that we're seeing across the board with many of our other clients. And then the two recommended options or changes would be the collision coverage on the commercial auto for the bus fleet and vans, and then the fully insured program on the workers' compensation.
Sorry, Justin, I'm sorry.
How many claims are still?
Pending on workers' compensation?
Yeah.
Go back to that, I think it's only a couple that are still open. I don't know that I have the data, but
Yeah, I didn't see it.
it's a
That's
handful,
fine.
it's like just a few, just a couple that are open. I think maybe one on the 2017 year, and then one or two on the 18-19.
Do we know for sure?
Sir?
Can you give me exact numbers?
Not at the moment, that's right. Yeah. I mean, maybe 5 open from 18.
See, when you say a few can mean a whole lot of things.
So we have 136,000 booked right now, here today, on a workers' comp reserve that covers these reserves plus any older prior, the key risk side. And we paid out right at 133,000 in deductibles.
But how many unsettled claims does that cover?
I think it's 4 to 6.
It's,
We
yeah,
can get the
maximum
exact
of
number.
6, but I think,
I think it's 4.
I believe there's just one in the 17 year. I didn't bring the claim report with me, so I apologize not being able to answer that directly. But there's only less than 4 in the 4 less than the 18-19 year.
So now, once those are settled and come up, our numbers could switch. Could our premium go up because of those?
Your
No.
premium would not go up because of those. Now, if those claims got worse than what the reserves are, then your cost could go up because you're paying that first $300,000, and this is on the current year, but not the renewal.
So the answer is could be.
It could be, yeah.
Okay.
Because
You don't say no because it could be.
The premium wouldn't, but the
Right.
cost.
The cost.
The claims cost, yes, sir,
Yeah.
because y'all are taking the first $300,000
Right.
of every claim. Right now, that's the claim adjuster's best estimate of those reserves, but they are open. And they could close for less than that as well.
And we record that as it occurs. If the estimate changes or a case changes, every month we look at that report and we increase our cost in that month for an increase in the reserve. The benefit to this higher premium is that all of this guessing and all of this risk is wiped out of the equation.
The insurance company takes on that risk, so you don't have to worry about it. Yes, sir.
If the numbers, those paid loss numbers could go up in 17 and 18, and almost certainly 19, but in 17 and 18, isn't that an even better argument for option 2? To get out from under that 300,000?
Yes.
It is now. It's not going to change.
No, it wouldn't
yes,
change.
sir.
Yeah,
Right.
too bad. Well,
That's right.
If we can,
Get away from that
if we
volatility.
can make this reverse, I want to go back to 15.
Ooh, yeah.
If we can adopt option 2 for previous years, I want to go back and adopt it for 2014, 15.
Yes, wouldn't that be nice? Yes. Yeah.
No, any more claims would actually make that option 2 a better argument, because it's just going to run up our costs.
Will it roll back to 14, 15?
No.
It won't
No.
roll back.
That's what I'm
That's
saying.
no year for
That's
nine.
what
No,
I'm
all
saying.
of
That would be
You have
nice.
to eat that.
Yes, sir.
That's your lunch.
That's right.
Well,
Not a very good one.
It's already been paid. It was
Yes.
paid
Yeah.
when it was incurred and the costs were closed.
Yeah, those costs are all done. There are not any claims in that year that's open, so that year's closed out.
17 is the latest. open
17
year.
is the latest closeout?
Yes.
But it's
17
still open?
Still got a place out there.
Still have a case out there. I believe that's just one case in 17, and then about 3 or 4 in 18, 19.
Oh, okay.
So Erica and I and Seacrest looked at this option in detail, and it's just a choice. Do you want to spend that little bit of money that we have in our budget and we currently have to cover the risk of having a year like 15?
Right.
And the conservative approach is always to insure against these risks, especially when you have the balanced budget and the small bottom line that we have. One little tweak in this will wipe out our entire projected bottom line.
At least we have a bottom line now.
I agree, but the conservative approach, and I think what Erica and I looked at, was the stability of knowing and
Cost
the
certain.
consistency. It's just a choice. Do you want to pay to mitigate that risk?
Right.
Thank you.
So
Thank you.
option 2 is our best,
Financial.
financially, option 2 is our best.
It's the safest, yes.
It's our best
Least volatility.
It's the safest.
It's the safest.
The only way that winds up costing us more money is if we basically have almost no workers' compensation.
Right.
When was the last time that happened?
Never, but
Never
you're.
here.
Yes, sir.
Are these claims made or occurrence policies?
There are occurrence policies. Except for the public officials, liability, management liability, and the employment practices liability.
Okay.
Those are all claims made, and that's the only way it's written in the markets.
So our two choices
A,
are option 2 and collision coverage. Those are the two optional
Yes.
choices we get to make to this renewal.
Do we have any other questions?
Just the same kind of question for the collision. How much money do we spend on repairing vehicles last year? This could also go back towards.
Is that in my, it may be in my,
Repairs for all runs about 100.
well, I wouldn't have the collision number
22.
because it's not insured. So I only have the insured number.
So we record that as outside repairs for fixed route and repair, and it averages about $130,000 a year. So
Now, is
the
that-
collision is,
That's just collision, though. That wouldn't be the other stuff that we'd be
That
doing.
we repair.
right, just the ones that the internal
Because of the
is at a much lower cost. So when you want to compare the cost of this coverage, the $54,000, you
So
look
even separate.
at the out-of-shop cost, plus really some of the internal, but the out-of-shop is the easiest way to compare it, and it runs
That's
about
100.
$130 a year.
Now, the only thing that was hard to compare the apples to apples is because this collision is only for the 2018 vehicles and newer. So that 100,000 would be for the entire fleet.
So that's the new Certibuses, the 18 that we got, plus the 6 electric that'll come. So it's a little less than half our current fleet. And I know you quoted the $400,000 value. You're looking at the inventory.
Yeah.
These buses are $600,000 to $900,000 buses. So
So
it
that
seems
premium-
like a reasonable amount of pay to cover those.
That
Potential
54,000
losses.
premium is on just the new inventory? or
Just
is
on
that
the
whole?
2018 and above.
And Erica has some information on that.
Yeah, I just wanted to comment about the collision, and I think Cindy sort of touched on it. So most of those claims we pay out, that collision coverage is for situations where most of the time people have hit our bus and they don't have insurance, or they leave the scene, things like that. So that's going to provide us a lot of protection for those claims paid out when somebody hits our bus. And we've got like $25,000 worth of damage to our vehicle, and we're retaining that cost. So this will give us a lot more coverage for situations like that, which happen a lot. Unfortunately, there's a lot of claims like that.
Going forward, in projecting into future years, if we're dating this from 2018 now, because that's the bulk of our fleet, do we always work on a 2-year timeline, or do we as we go out into the future, do we want to keep covering that 2018 to a certain point?
You want to keep coverage to a certain point until it's fairly well depreciated, because it's going to be adjusted with depreciation and consideration. So we picked the 2018 because that seemed like the best point as far as getting the most coverage for our buck.
You know, I don't think we have a new bus after, before 2018, took 100 years.
Good questions. Thank you all.
Any other questions? All right, thank you, Cindy.
Thank you.
And Jenny, thank you.
Thank you.
I guess we can go to you, Mike. The action item for now. We need to vote on renewal.
So the issues to inform the board about the upcoming renewal for multiple insurance lines, including property, general liability, business, automotive, workers' compensation, public officials liability, crime, and private and security liability, and to seek board approval to find coverage.
Do I have a motion?
Move to approve the renewal, including option 2 on workman's compensation and the collision coverage additional premium.
Second on that? I heard a second somewhere.
Second.
Clinton? All those in favor? Raise your hand. Opposed, abstained, no, because it's unanimous. All righty.
If I might add, thank you, Erica, for helping coordinate all of this. I think a lot of the good comments we've heard from you two are to her hard work.
It's a very complex issue.
And to the rest of the team, but I know that's your job. So.
It changes weekly. All right,
All the
next.
drivers who've avoided accidents.
Yes.
All right, next on the agenda is we need to go into executive session to discuss personnel.
Let's move to go into executive session for the purposes of discussing personnel.
Second by Chester, all in favor?
Aye.
Unanimous? Thanks, everybody. We'll just
Bye, everyone.
A little bit.